All right, welcome back to Stock Tricks with Nick for this week's Breakout Watchlist from November 15th to the 19th. In this video, I'll be covering 10 stocks that have breakout potential in the upcoming week. Before we get to the stocks, I have an important announcement to make. After 2 years of running the Stock Tricks with Nick YouTube page, we now have a sponsor. So thank you, MarketSmith, for sponsoring the Breakout Watchlist and our live stream on Tuesday. Along with the partnership with MarketSmith, I'll also be posting content from their platform on TikTok. So follow me on Stock Tricks with Nick. Earlier this week, I also announced that I'd be partnering with Traderline to run their TikTok account, so make sure you give them a follow as well. Both of these partnerships are with brands that I respect, have used in the past, and truly believe can help with your trading. Here are the 10 stocks that we'll cover in the video. If any of them meet your trading criteria, make sure you leave a like and subscribe to my channel. And one last thing before we get into the charts, financial disclaimer, this is not financial advice, this is for educational purposes only. Please do your own due diligence before trading. Trading comes with financial risk. With all that out of the way, let's get into the charts starting now. First, we'll use MarketSmith to break down each stock's fundamentals, group strength, fund ownership, and composite rating. Then we'll jump to the other platform to break down the chart. So first we have ANET. This is in computer networking, which is the 12th strongest group right now out of 197. That earns it a group strength rating of A+. It's got accumulation distribution of A, meaning larger volume days come on up days versus down days. We see accumulation in the stock. A 97 composite rating out of 99, so very strong there. A 95 relative strength rating, and within the group, it is the strongest stock out of 15 on a relative strength basis and second strongest on a composite basis. Taking a look at fund ownership, we always want to see this number increasing to show funds are accumulating the stock, will continue to push the price higher. And you can see since last September, 1404 to 1552 this September, fund ownership has been gradually increasing. Taking a look at the fundamentals, earnings per share up 9%, 24, 29, 22 year over year. Sales up 17, 28, 31, 24. And after-tax margin increasing 31, 30, 31, 32. So very strong fundamentally, good relative strength, good composite rating. Let's take a look at the chart. You got the 200-day, the 50-day, the 20, and the 8 all in the right order. So everything is in an uptrend. Very little resistance up top. We did pop on earnings, but it closed lower in the range on that post-earnings day. The next day after that, inside candle, but strong closing range. Then we finally took out the high from that earnings day. Just traded sideways, down a little bit. What I would like to see on this is continue to trade sideways, allow that 8-day exponential moving average to come up. Then if we can catch this in the second half of the week, we can use Thursday and Friday's high, 529.17, 529.21 as a potential buy point. Otherwise, just a break into all-time highs here at 536.54 for ANET. Next, we have APP. This has got a group strength rating of A+ in computer software, which is 10th out of 197. Accumulation distribution, A-, still pretty strong there. Composite rating, 89. Relative strength rating, 97 itself. Within the group, it is the second strongest out of 44 stocks on a relative strength basis and sixth strongest on a composite basis. Taking a look at fund ownership, we only have 2 quarters of this, but we did see an increase, 115 to 125. Looking at the fundamentals, we had negative earnings up until the June quarter, and then we saw 167% year over year increase, and then 104% in September. Sales up 83, 132, 123, and 90. And then after-tax profit margin holding steady, -4, -2, +2, flat. So taking a look at the chart, this was a name that I was watching going into earnings. It had this nice move higher. Looking at the chart, this was a name that I was looking at going into earnings, had a nice, let's measure this, 45% move higher. Started seeing some resistance right around $100 and going into earnings. This would have been a nice buy point on this candle if it wasn't for earnings in 2 days. And the next day we gapped down, not on earnings. The earnings was after hours. So when earnings opened the next day, we opened up, 8% or so. And then just really strong closing range on Thursday, up 20% from the previous day's low or previous day's close. Then on Friday we saw, was this an inside candle? Yep, inside candle in the upper half of Thursday's range. With this, I would love to see a couple more candles tightening up, allow that 8-day to come up, but then we do have a pivot buy point. These two highs, 116.09, 116 for APP. Next, we have ARBK, and this is crypto related, so that's always a theme to focus on. Computer software financial is what it's technically grouped in, which is 23rd out of 197. That earns it a group strength rating of A. Doesn't have enough data for accumulation distribution numbers just yet, but composite rating of 94 and relative strength rating 78. It did just IPO on the 23rd of September, so still trying to find some data there. Let's check the industry within that group that it's in. Of 38 stocks, it is the 6th strongest on a relative strength and 2nd strongest on a composite basis. Fund ownership, we only have 1 quarter to work with, and we have 5 funds in it. Wanted to take a look at the fundamentals because they are very strong with this. Earnings per share plus 200, plus 1,000, plus 1,000, plus 1,000. Sales up 88, 212, 213, 386. After-tax margin increasing 12%, 23, 23, and 67% last quarter. So very strong earnings, and that is out of the way, so we can focus on the chart now. So taking a look at the chart, because it IPO'd on the 23rd of September, I do like to use a smaller chart, 10-day, 15-minute, each of these candles are 15 minutes. With IPOs, you have to handle them a little bit quicker, so that's why I like to use a 15-minute, hourly chart, whatever, to trade them a little bit different. So on the 15-minute chart, you can see we're consolidating here, putting in lower highs, but also now this has made the turn, putting in higher lows. So really, in these last couple days, started to consolidate here. The last 15-minute candle saw just a push higher, but then got reversed lower, down 2.8% at the end of the day on Friday. This would be a potential buy point with a break over $19. $19.01 was the high. If we can open just down a little bit, consolidate, and then take it out second half of the day on Monday, that would be ideal. Or if we start lower, take out this low to really shake out the last weaker hands in the name before taking off, that would be awesome as well. But still looking at that $19 range for ARBK. Next, we have Bloom Energy, BE. This is in Energy Alternatives and Other, which is the 11th strongest out of 197 groups right now. So A+ group strength rating, A+ accumulation distribution, 62 on a composite rating. That's a little bit low, but taking a look at the relative strength number of 94, that's what I usually focus on most. Relative strength with price pays. Your composite score doesn't pay you. So 94 relative strength. Taking a look at the group, which is a strong group in itself. This is the 6th strongest stock in that group of 43 and 14th strongest on a composite basis. Taking a look at fund ownership, we did start to see this decline going from 490, 453, 420 in September. But since September, we've seen a very large volume up days. So I assume we've seen some institutions take positions that maybe will get reflected in the December update for fund ownership. Looking at fundamentals, negative earnings, that's definitely a drawdown, but sales up 17, 24, 22, and then 3. After-tax margin, still working it out, -5, -6, -17, and -25. So fundamentally, not a super strong company at this point, but we're seeing strong accumulation distribution, we're seeing it in a strong group, and we're seeing it set up. Taking a look at the chart, this did have a stronger pullback than I would like, down 63% from high to low. Typically, I won't trade stocks that have pulled back more than 50% off the highs. The thinner the base after a strong move up, the stronger the stock should be in the future. Because with more buyers, you're not pulling back as much. With less sellers, you're not pulling back after that move. So 63%, that's a little aggressive on the pullback. All growth stocks got hit starting in February, so it wasn't a surprise to see this pullback, but 63%, a yellow flag on the setup about that. What I do like about it is a strong character change here, tons of volume on this day as we gapped up and closed the day up 37%. So that's absolutely different than what's happened all in the space here. Since then, we did drift higher, had a quick pullback into earnings, undercut the low in the pullback, and then shot higher. And now we're consolidating above the 8-day exponential moving average. We have 1, 2, 3 days, their highs right around the same spot. I want to take a look at the 10-minute chart or the 15-minute candles. Similar story to ARBK. you could see this tightening up. So you wouldn't really see it on the, I guess you could see it on the daily candle as that, but looking at the 10-day chart, 15-minute candles, it becomes very clear that this is starting to tighten up, and you can really get a tight stop on the range here. So a break over 34.42 area, stop under the low there. That's only 2% risk for BE. Next, we have Lending Club, LC. This is in financial services and specialty, which is the 17th strongest group out of 197. Within that group, let's check. It is the strongest on a relative strength basis out of 60 with a relative strength rating of 99. 12th strongest on a composite basis, composite rating of 94. So 94 composite, 99 relative strength. When both of those numbers are in the 90s, it's a stock to watch. Accumulation distribution, A, very strong. Let's take a look at fund ownership. That has been increasing, 208 from September to 335 this September. Taking a look at the fundamentals. Didn't have positive earnings up until June, where earnings were up 208%. September, earnings were up 400%. Similar story with sales, minus 60, minus 25, then plus 416, plus 253. After-tax margin, minus 30, minus 2, plus 30, plus 30. So we're turning it around, and we're seeing that with these gap ups in the chart. Looking at the chart, you can see when earnings happened in July, nice gap up there on heavy volume. I don't believe this is earnings. I think this is the correct one, where the day before earnings, the stock was down 8%, not making it easy on anyone holding into earnings. And then right after that, we gapped up and closed up 33% on the previous day. So 8% shakeout the day going into earnings. That sucks. And then a 33% move up. I'm sure a lot of people were upset that they got stopped out right before a move like that, but they don't make it easy. Since earnings, we did drift higher for 3 days, and now we pulled back. And one thing that I like is we pulled back to the 8-day, and then we shook everyone out again on Wednesday. Market was a little bit weaker Tuesday, Wednesday last week, and then we turned it around. And then we have a nice inside candle on Thursday, higher highs, higher lows on Friday. If this can consolidate more, maybe pull back, allow that 20-day moving average to catch up. That improves the trade going into the future. But if we start lower, then take out the high on Friday. 44.80 is a potential buy point. All right, we are halfway through the list. If you guys are enjoying the video, please leave a like and subscribe to my channel. And if you have any stocks that I don't mention in this video that you think have breakout potential, drop them in the comments and I'll check them out. Thanks. Next, we have NEWR. This has got a group strength rating of A+ in computer software databases, the 5th strongest out of 197 groups right now. Within that group, it is the strongest stock out of 26 with a relative strength rating of 97 and 8th on a composite rating of 20 out of 26. Composite rated 80, accumulation distribution A, always good to see. Taking a look at fund ownership, this had actually started to pull back up until June of this year, and then we've corrected the ship up to 382 in September. Taking a look at fundamentals, negative earnings, so nothing to really report on there. Sales up 9, 8, 11, 18, nothing crazy there. And after-tax profit margin, negative. So you're looking at this, Nick, why are you talking about this? Because we did have a character change with a gap up on earnings, and now we're starting to consolidate. So let's check out the chart. So with this much volume and this large of a gap, not much to the left of this matters. Let's see. We did move up 84% from the low and the pullback here. Wednesday inside day, Thursday inside day, and Friday. So we have a triple inside day. Things are consolidating up here. What I would want to see is just a breakout over Friday's high, 123.49. The only downside to that is the 8-day exponential moving average still hasn't had time to catch up. Maybe the 5-day is now starting to curl under here. But ideally, we do get some more sideways action before taking out the high. But right through here, either of these 2 daily highs is a potential buy point. Stop under the low, 3% there for NEWR. Next, we have ON Semiconductors. That's in a very strong group, relative strength rating of A, 18th out of 197. Within the group, it is the 2nd strongest stock out of 40 with a relative strength rating of 94, and the strongest stock on a composite basis out of 40 has a composite rating of 90. So composite rating 90, relative strength rating 94, group strength A, and accumulation distribution A. Really checking a lot of the boxes here. Looking at fund ownership, that also is increasing, went from 1,003 September of 2020 to 1,412 this September. Fundamentals now, earnings per share up 17, 250, 425, and 222. Sales up 3, 16, 38, 32, and after-tax profit margin up 10, 10, 17, and 22%. All the boxes there have been checked. Looking at the chart here, we did have a nice gap up on earnings, about 15%, had followed through the next 4 days, all the way up to 28%. Since then, the market did pull back, and we got a pullback of 8.8%, but look where it found support, right on that 8-day exponential moving average. We made higher highs, higher lows, a unfilled gap on Thursday here. So we closed down here, opened up, and we never closed that gap. And then we got an inside day on Friday, almost a wick play. Unfortunately, not the entire candle here had been in the upper wick on Thursday, but still looking for a break over Friday's high, 59.15 as a potential buy point for ON. Next, we have a stock that has been super frustrating for me to trade, PERI. Still want to cover it here because I think it has potential. It's in computer software group, 96 out of 197. It's a B- group strength rating, but it does have an accumulation rating of A, composite rating 95, relative strength rating 98. So 290s, always something I look for. Within the group of 18 stocks, it's the strongest on earnings, relative strength, accumulation distribution, overall composite score. So it's the strongest stock in a slightly weaker group at the moment. Taking a look at fund ownership on this, that has been increasing from 28 to 77. Nice steady climb there. And looking at fundamentals, earnings per share up 41, 12, 371, and 90 year over year. Sales up 51, 36, 82, and 45. After-tax profit margin 12, 8, 12, and 13. Looking at the chart, this had a very long base, basically since February up until this point. Then we gapped up on earnings. Let's see. We gapped up 12%, pushed higher all the way to 36% on the day, and then closed up 31%. Did not catch the move at the start of the day. That was a mistake on my part, obviously. Then we had 2 days where this pulled back. You could have started a position with a break over the previous day's high. I didn't take it there, but we saw a gap up, pushed higher on that Monday. And then since then, we've really chopped around here. I did take a couple trades within here, got stopped out for 1% or 2. But now we're starting to consolidate here. You see a couple large, longer wicks showing that sellers are stepping in above 30 here. A couple times here, 1, 2, 3, 4. And then things changed a little bit on Friday where we had a long lower wick, meaning buyers stepped in on that 8-day exponential moving average or 10-day moving average, whichever you use in your chart. But now we're starting to consolidate here. ATR, average true range, is just starting to come in. This measures those daily bars. Ideally, we do see some consolidation, allow that 20-day moving average to catch up. And then if we just take out the highs here, I'll be looking for a break over like 30, 50. If we can consolidate lower, then maybe Friday's high comes into play at 30.15 as a potential buy point. But I really like, we still have good up days on good up volume days, lower volume pullbacks. We're respecting that 8-day exponential moving average for the most part, never closing underneath, and we're finally starting to tighten up a little bit. So keep this on your watch list, PERI. Got 2 more for you. Next is SPT. This has got a group strength of A+ in computer software enterprises, which is the 16th out of 197 groups. Within that group, it is the 5th strongest on a relative strength basis out of 114 and 22nd on a composite basis. Has a relative strength rating of 97, composite rating 87, accumulation distribution B- on the lower end there. Fund ownership on this is increasing, 218 from September of 2020 to 459 September of 2021. Taking a look at fundamentals, earnings per share, negative for the most part. We did have positive 1 cent in June, not much to say there. Sales up 33, 34, 42, and 46 year over year, so we're seeing acceleration of sales now. After-tax profit margin still negative though, got to figure that out. I really like this chart. We were in a very strong uptrend. Zooming out here, you got the 200 Now you have the 50 and the 20 right around the same price, and the 8-day hovering under the lows of the previous couple candles. Since the high, we had a pullback of 25%, a second pullback, 12%, and then earnings kind of messed everything up. But then we did get going again, and since then we've pulled back to that 8-day exponential moving average, and then had an inside candle on slightly less volume on Friday. But again, respecting that 8-day in the pullback. Looking for a break over Thursday's high, 137.43 as a potential buy point. The only downside to this is the stop under that day's low, 5%. I usually try to get a 3% stop on trade, so I might not take a full position on this, but something to manage my risk against the 5% stop versus the 3 that I'm usually taking. And last but not least, UROY. I think I put this on the watch list last week. I did trade this last week and got stopped out, but it is starting to consolidate again, so taking a look at it. This is an oil and gas. I think this is uranium though, which is, I guess it falls into that category. So don't put too much emphasis on the group strength of E because it is uranium, not oil or gas. It's got accumulation distribution C+, composite rating 53. But really what I'm looking at is a relative strength rating of 97. This is the third strongest stock in that group. Again, I don't think it's in the right group. But fund ownership is increasing. We went from 1 to 10. This is a cheaper stock, only $5.50 right now. If that doesn't fit your criteria, don't trade it. Everyone needs to kind of find what works for them. Doesn't have any fundamentals really to go over, so let's just jump to the chart. So what I like about this is the massive, massive volume on this up move. We had a 134% move up, followed by a 37% move, quick move down. That got pushed back actually a little bit higher than previously, up 61%. We pulled back again, had a nice shakeout on the 29th under the 20-day moving average, really came back, shook out all the weak hands, pushed higher, and then this is where I got in on the move here. We pushed out, and then on Wednesday, I think I cut it basically around even, maybe 0.5% loss, whatever. Just wanted to take some exposure off in names that I wasn't as confident in, but really this held up well. A very wild Wednesday, but then inside day on Thursday, basically an inside day on Friday, a little bit higher or lower low, but respecting that 8-day exponential moving average still. Volume is starting to tighten up, price is starting to tighten up. You can see ATR dropping a little bit here. As with anything, more time trading sideways, tightening up, improves the trade, improves the stop loss that you can use. But we have this 20-day moving average starting to push higher. That could be where it curls up. And we have 2 daily highs to work with, 575, 574 as potential buy points for UROY. And that's going to be the breakout watch list for the week. If you enjoyed the video, please leave a like and subscribe to my channel. I post this breakout watch list every Sunday morning and then go live on Tuesday night to take a look at any stocks that you guys want to see. Thank you again for my new sponsor, MarketSmith, for sponsoring both of the videos that I put out and my TikTok. If you're interested in using MarketSmith, there is a link in the description below that you guys can use to get that. Have a great week, and I'll see you guys on Tuesday.